Hi there, welcome to video number 12. In this video we're going to talk about understanding leverage. Now I'm all about layman's terms, okay? I've tried it the other way, understanding all the nitty gritty and how the indicators were put together and all the formulas, and I found that it didn't really improve my trading one little bit. Alright, so I will just tell you in layman's terms what leverage is. Brokers will offer a leverage of 1 to 1 up to 200 to 1, mostly. Other brokers will do the same but also increase the leverage up to maybe 500 to 1. There are brokers out there that leverage out to 1000 to 1. Now, what you're essentially doing is that you're borrowing money against the market. And the reason why you're borrowing money is because of the figures that you look at on a currency pair are works out to be smaller than penny stocks. Okay, so you would need to put a considerable amount of money into the platform to get a nice healthy return back. Alright, so what they've done is they've essentially allowed you to leverage money to allow the market to move and what have you. So it's a little bit complicated, but so if you're on, so essentially you're leveraging your money mostly. If you're on a 100 to 1 account, you're basically borrowing up to 100,000 times of what your balance has. Alright, so let's give you another example. Let's go to this website here, and it's called investopedia.com /articles /forex /07 /forex _leverage.asp. Alright, and that's right there. Alright, and what I've basically done is I've typed in what is forex leverage. Alright, now if you go through this article here, it will give you a little bit more insight of basically what it's about. Alright, so this just give you a little brief overview. For example, if you have $10,000 in your account and you open up a $100,000 position, which is equivalent to one standard lot. Okay, so one standard lot is equivalent to $10 per pip. Okay, now what is it telling you that you're doing is that you're borrowing 100,000 times more than what you're actually risking. Alright, so you'll be trading 10 times leverage on your account. Alright, so if you trade two standard lots, which is worth $200,000 in face value with a $10,000 in your account, then your leverage on the account is 20 times. Alright, this also means that the margin-based leverage is equal to the maximum real leverage a trader can use, and since most traders do not use their entire accounts as margin for each of their trades, their real leverage tends to differ from the margin-based leverage. I just keep going through this all the time, but you just got to be careful. What it basically is, in another layman's terms, the lower the leverage, the more it's going to cost you to open up a trade. Basically, all right. It's normally, like for instance, if what's the euro at right now? So if I was to buy this, I think we actually got this at 100 to 1 on this particular account. So this would cost $1,200.29 or something to open up. But with a 200 to 1 leverage account, that price is reduced by half. Alright, but your risk is still kind of sitting pretty, but some people say that if you go onto like a 500 to 1 leverage account or a 1000 to 1 leverage account, you're putting yourself at risk. Well, no, not really. You're only putting yourself at risk when you actually trade more lots. Alright, by having a higher leverage account, it allows you to actually have more lots being traded at any one single time, because it costs less. So for instance, let's just say for argument's sake that the euro was sitting at 1.000. At 100 to 1 it's going to cost $1,000. At 200 to 1 it's going to cost $500. At 300 to 1 it's going to cost $333.33. And at 400 to 1 it's going to cost $250. I think, yeah. And at 500 to 1 it's going to cost $200 to open up that trade. So if you did it at 100 to 1, you're basically essentially, if you had a $10,000 account, you're left with $9,000 margin left. Alright, you can't really go ahead and open up more trades. You have to really be patient and wait for those trades to close and then open up a new one and so forth and so on, because you need as much breathing room as possible. But having a larger leverage account allows you to have that breathing room. Okay. But on the same note as well, you have to be very, very, very careful. Just because the amount of the trade is become less, your lot size doesn't become less if at one lot. All right, it still works out as $10 per pip. Okay, so you need to basically work out your money management, which we will get into in the next video. All right, so once more, go back to this article to give you an overview, a little bit more technical, a little bit more nicely laid out, to give you an understanding of what it means. Okay, so until then, I will see you in the next video. Bye for now.